We're down 0.7% in South Africa, 10.65 billion rand passing through the market. We're actually down 1.2% a little earlier, and it seems that we were off the worst levels, but we've had a relatively volatile day, in fact.
Yeah, it's been a very lackluster day until the last literal 2 hours of trade, where we were slightly negative and then we had a massive reduction to that level that you spoke about and then recovering in the closing auction. One of the few negative days we've had quite a nice recovery from the lows of about 30,000 points, and we were very close to 33. So a little bit of profit taking probably taking place today, as well as a lot of insecurity about world markets at the moment in general starting to come through. We have to wait and see what's happening to America. We had an interest rate increase in Europe, and we have these potential new issues in Japan, which will certainly affect the sentiment of world markets.
Exactly,
so it's a bit of a difficult, very, very sad to hear that. And very interesting to see how the Nikkei will react to that early morning, basically.
Nicholas, wouldn't you say the markets have been quite resilient to
Absolutely,
an oil price that is sitting at $123?
That's true. We spoke about
Coal
that.
prices at all-time highs.
I mean, 120 again. We're on 10 liters, 10 rand a litre in South Africa again, and you know that's really going to affect markets in our view, at least in the short term. But no, markets are resilient. They're still wanting to go up. Technically, we're looking really good. I mean, so from a trading perspective, I think most charts are looking pretty strong at the moment. We are overbought in the short term, there's no doubt, but I think any pullbacks from a technical perspective are looking viable at the moment. So that's also interesting to note.
So 10.65 billion rand passing through the market.
That's an average day.
That's an average day. What is interesting to note, when we say the markets have been resilient, when you look at the US, we've got volumes dropping to 11-year lows.
It's interesting, actually. It's something that I haven't been keeping track on as close as I should, but I think for them it's a wait-and-see attitude. You know, let's hope a law is passed very soon so there can be more capital injection to that budget so that we don't have a complete stay in the government at the moment.
Government shutdown. RMB holdings down 4%. A really strong day yesterday. It was up around 5%.
I think that's exactly right. It's been a strong-looking stock. You know, after unbundling a few of those assets, it moved from about 24 and 25 and up to 29. So it's had a 16% increase in I think a week or 2 weeks, and a little bit of a sell-off, even if it's 4%, is nothing unusual in my opinion. There was a little bit of a pullback in most stocks, but we did see some buying on the financial side. I think it was mainly Old Mutual and Nedbank that we saw.
Exactly. I mean, Nedbank was up 1.5%, and
where did
Old Mutual
end?
gaining 0.4% to the good, and it closed at 15.63 rand.
Yeah, so that's probably why the financial index didn't pull back as much as the others, mainly due to those two. But I think it was just a whitewash for everybody else.
So why do you think the likes of Old Mutual and Nedbank are doing quite well? I mean, there's a lot of speculation.
I think
Old Mutual news coming through from the US as well.
Yes, exactly. I think that was one thing that came on sense, was they finally sold off the US life division. I think they got $350 million for that, and you know, HSBC is now off the table with buying out Nedbank at the moment. So, you know, who else is going to, you know, be the next prospective interested party? I mean, that is something that's been on many people's minds. You know, South African banks are ripe for the picking. You know, we've got First Rand now, we've got Nedbank potentially. We've already had interest in Standard Bank a few years ago with the Chinese.
So you think that a deal could be imminent?
I think so. I mean, a lot of those prices are looking quite cheap if one has a real long-term perspective on things. I mean, I personally wouldn't buy into financials at the moment, but if you are an interested party from overseas and you want to get exposure to Africa, you know, our banks are top class and relatively cheap from a longer term perspective.
Pick and Pay down almost 4%.
Yeah, I saw that. That got hit. Yeah. I think in general, you know, the market was a bit disappointed with the recent trading update. I've seen some weakness in that stock. The stock has been fairly volatile. You know, in our opinion, we still think it's a decent buy.
44.40, a decent buy.
Yeah, I mean, we prefer the Pick and Pay holdings, but in general, picking up stock, if you do see some weakness in that, we think it's we feel it's our preferred retail option at the moment. But generally at the trough of its earnings cycle, in our opinion. So still negative sentiment towards that stock.
Nicholas,
at the
moment. We're looking at the JSE All Share overall, 32,633. Anything in particular that would make you sell out of the market?
It's a tough question. Well, this is what we're thinking about the whole time.
We've got tsunami warnings, we've got ECB rate hikes, we've got some hawkish comments out of Fed.
But the markets keep on shrugging it off. I think the biggest question is where do we put the money then? You know, do we put into a bank account where we're still getting a very flat interest rate? Do we buy bonds where we're going to probably see long-term interest rates tick up, which means bond prices will go down? Do we buy property in a fairly flat property market? The thing is, where do you stash your money? And if more and more money is being pumped into the market artificially, or whatever means you want to call it, the markets will tend to be this resilient and tend to go up.
Which you did just before June, just before the quantitative
the sell and may and go away story. Yeah, well, that's going to coincide with the whole ending of the QE2 or the quantitative easing too. So I would still be hanging on, quite frankly, right through April and into May. Probably have another look in June. I would agree with you there. But yeah, if you're making a decent profit on some of these resource stocks that have really ticked up, I don't think you're going too far.
You're still buying into the resource space. That is your.
I am. I really am. I know there's like a bit of consternation now with NUMSA asking for a 20% increase for their workers, specifically on the steel mills and so on. That'll be interesting to see how that pans out.
Are you buying into Sasol? Are you buying into Anglo Gold?
Well, look, Sasol at these prices is a little bit difficult, but we have been buying into Sasol. We have been buying into Exoros. I mean, our biggest push are your base metals, your oil, your iron ore, your copper.
Even with the Chinese interest rate hike again.
Even with the Chinese interest rate hike, I think their economy is very interesting. They react strongly to any inflation fears. So I still think that's an economy that's going to continue to grow regardless of slight increases in the interest rates.
Nicholas, thank you so much for joining me.
Okay,
much
good to be here.